Hey, what's going on everyone, and welcome to episode number 29 of this educational video series. I'm your host VJ and I'm a CPA. Happy Father's Day to all of you. Hope you all having a nice weekend. This week's video covers the topic of bonus depreciation. So let's dive into it. First, let's take a look at the overview as to what depreciation is. Depreciation is basically a deduction that allows a taxpayer or a business to expense the cost of certain assets that they acquire over the useful life of that asset. So for example, let's say if you buy a computer for your business for $1,000, then you can write off the cost, that $1,000 cost of that computer over the useful life of that computer. Computers usually have a 5-year recovery period, so you can write off a portion each year for 5 years, and the total write-off will equal to the entire cost, which is $1,000. So it's basically a deduction for the investment that you make in certain fixed assets for your business. These fixed assets include equipment, fixtures and furnitures, buildings, any improvements that you do to the building, etc. Now, periodically, tax law is modified to allow additional depreciation for eligible assets placed in service during certain time period. Now, U.S. Congress allows this special depreciation to stimulate the economy. The idea behind it is that if taxpayer can claim more deduction, then they'll be inclined to make additional investment and thus stimulate the economy. So periodically Congress enables businesses to take this additional depreciation, and this additional depreciation is referred to as the bonus depreciation. Usually the allowable bonus depreciation is shown as the percentage of total cost. So 50% bonus depreciation means the business can expense 50% of the cost of a particular fixed asset as bonus depreciation during the first year that the asset was placed in service. Then the remaining 50% of the cost will be depreciated over the useful life of that particular asset through regular depreciation. So as you can see, bonus depreciation can be very useful for a business as it allows to take additional depreciation in the current year, thus reducing the tax liability of the current tax year. Now let's take a look at current regulation. At the end of 2015, Congress passed an act which is called Protecting Americans from Tax Hikes. And this act basically extended the allowable bonus depreciation for the assets that are placed in service on or before the end of 2019. Under this act, the allowable bonus depreciation percentage rate and the applicable years is summarized in the table on your screen. So as you can see, for any assets that's placed in service in 2015, 2016 or 2017 calendar years is eligible for 50% bonus depreciation. This rate drops to 40% for assets placed in service during calendar 2018, and the rate again drops to 30% for assets placed in service during calendar 2019. Now, under the current regulation, any assets that are placed in service on or after 1/1/2020 will not be eligible for bonus depreciation. Tax law again may be modified to extend the bonus depreciation for assets placed in service in 2020 or beyond, but as of right now, the bonus depreciation is set to expire at the end of 2019 calendar year. Now, we mentioned before that bonus depreciation is allowed on certain eligible assets placed in service. So what are the eligible assets? So eligible assets include any maker's properties with a recovery period of 20 years or less, computer software, water utility property, and qualified improvement property, including leasehold improvement. So what is a maker's property? So maker is basically the current tax depreciation system in United States. So all assets placed in service, acquired by a business and placed in service, is depreciated under the maker's system. So any asset that has a useful life of 20 years or less is eligible for the bonus depreciation. These assets usually include all your computers, equipments, fixtures, and furnitures, etc. The law specifically includes assets such as computer software or water utility property, and it also includes qualified improvement property, including leasehold improvements. Now, qualified improvement means any improvement to the internal part of a non-residential real estate building. The other requirement for an asset to be eligible is that the original use of the asset must begin with the taxpayer, meaning a taxpayer cannot acquire a used asset and then claim bonus depreciation. The asset that they acquire must be a brand new asset. And of course, as we discussed before, all assets placed in service on or before 1/1/2020 will be eligible, as under the current regulation, the bonus depreciation is set to expire starting with 1/1/2020. So these are basically all the all the requirements for an asset to be qualified for the bonus depreciation. Now let's take a look as to how bonus depreciation is useful to a business. Now we briefly touched upon this in one of the previous slides, but let's take a look into more detail. Basically, bonus depreciation allows the taxpayer to accelerate the depreciation deduction on qualified properties, meaning they can take a larger deduction in the year that the asset was placed in service, and this results in a larger savings in the tax liability in the current year. Let's take a look at an example. Let's say a taxpayer buys a brand new computer for $1,000 on July 1st of 2016. Now, for this computer, the taxpayer would have been able to deduct $200 in year one as a regular depreciation expense without taking into consideration the bonus depreciation. Now, with the bonus depreciation, if you recall, for asset placed in service during calendar year 2016, the bonus depreciation rate is 50%. So right off the bat, the taxpayer would be able to deduct $500 as bonus depreciation, and the remaining 50% of the cost, meaning remaining $500, would have been deducted as regular depreciation. So for the regular depreciation, the taxpayer would have been able to deduct additional $100 for a total depreciation deduction of $600 under the bonus depreciation method. So as you can see, with bonus depreciation, the taxpayer is able to increase the deduction dramatically in the year that the asset was placed in service, and this would result in a lower taxable income and lower tax liability in the year that the asset was placed in service. So, for small business, this can be a significant savings if they have to buy a bunch of assets during any of the years that the bonus depreciation is eligible. So hope that makes sense to you all. If you have any questions, feel free to reach out to me and I'll be more than happy to answer any questions you may have. Now, all the rules and regulations mentioned in the video are current as of right now, but may change at any time. So, I would highly advise that you consult with your tax preparer or just go to the IRS website to find out the current laws if you're watching this video sometimes in future. or you can just feel free to reach out to me, and I'll be happy to kind of give you a rundown on the current regulation as well. So last thing before I sign off, if you like this video, if you find the value in the videos that I create, please hit the like button, share with your friends and colleagues, subscribe to my YouTube channel. That's it for this week all. Take care. Bye-bye.